end of this year. So just to better understand how you think about economics, for families when prices are affordable and unemployment is low. That's why price stability, no recession. If the central bank were to cut rates from 3.5 to 1% or lower, a massive cut, that would typically push prices up, right?
Senator, unlike many of my colleagues past and present, I don't believe in forward guidance. I don't believe that I should be previewing for you what a future decision might be. I think it's essential that the Fed make decisions in the room.
Mr. Warsh, I'm not asking you what decision you would make. Obviously, that's going to be up to you. I'm asking you for a framework in which you think about these things. And it seems a pretty straightforward question about what would happen if we reduced interest rates by the end of this year to 1% or less.
The debt accumulating the critical mass and getting
or most
so
economists
far out of hand
would
that
say
we're
that
not
would
able
drive up
to
prices.
do
And
anything.
so that's what I'm
It's
asking.
math,
Would you
man.
agree
Math.
that would likely
Doesn't
drive
lie.
up prices?
So,
run the numbers.
Senator, the Fed has two important monetary policy tools. One is interest rates, and the other is a balance sheet that we created in the 2008 financial crisis. Those tools should be working in concert, not at cross purposes. So it's hard for me to isolate one variable when we'd have to have a discussion on the other.
All right.
But generally, sorry.
Well, let me just say this was a pretty clear question about the framework in which these decisions are made. I heard you talk about how AI may change that calculation.
Come on, man.
I will just say, and I think you know this, I mean, I have this,
You know better.
Financial
Just do
Times,
the
we
math.
have the economists reject Kevin Warsh.
To my viewers,
that
go to
CBO.gov
rate
cuts, and I
Congressional
think
Budget
find
Office.
it just
The bipartisan
implausible
office. It
to
speaks for
suggest
itself.
that by the end of this year, AI would produce such increases in productivity that it could
AI's been helping me a
reduce
lot.
a rate cut to below 1%, and you can't tell me that that would very likely increase prices.
So, Senator, can I say two things? First, sorry.
Wait,
Quick. Sorry.
and we're not worried about prices. We're worried about the
Monetary
debt
policy
spiraling
works
out
with
of
long
control.
variable lags, quite famously.
They don't
If
have
the
a
Fed were to
choice.
make a decision
Like it or not.
today about the conduct of policy, it's likely to find its way to the real economy 6, 9, or 12 months later. So it's difficult to judge policy today for an immediate result. And that would be my only concern about the framing of your question.
Thank you, Mr. Chairman. I just, in closing, this is what concerns me.
Where you go, guys.
Your views
Congressional
now
Budget Office.
flip to conform with where the President of the United States is, and that's been a concern many of us have. Thank you, Mr. Chairman.
Senator Kennedy.
I want extra time.
Many of us. Oh, Kennedy.
Consider these 5 minutes
I
of
love it.
parliamentary inquiry. Professor, what's the
Everyone's laughing
subtopic?
already.
Those tools should be working in concert, not at cross purposes. So it's hard for me to isolate one. I think it's that thing you stick
You know,
your
one would
hand
think,
in.
you know,
Kind of like this?
Yes.
What's
based
a
on
human sock
common
puppet?
sense.
Isn't a human sock puppet somebody will do what somebody else tells them to do?
I think that's what the senator was trying to suggest.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
I'm honored the president nominated for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
My friend Senator Warren, it says my friend suggested that, I wrote it down, you use your power, you might use your power to bail out your friends if they get in trouble. Kind of like President Biden did with Silicon Valley Bank and Signature Bank. She didn't say the last part. I just
They
guessed
went
that.
to the
Are you
wall.
going to do that?
No, Senator.
Swiss bank, around for over 100 years.
The ethics folks,
Gone.
they've cleared you, but they said you got to sell some assets. Is that right?
Yes, sir.
Okay. And these assets that you have, you can't just hold a yard sale, can you? Okay, so it takes a reasonable period of time. Right?
Yes,
And you promised to sell them, right?
I did.
And if you don't sell them, we'll know, and the ethics folks will know, right?
Yes, I'd be in violation of the ethics agreement if I refuse to sell them.
But you're going to sell them, right?
Yes, Senator, I will.
Okay. Can we agree that politicians have the right to offer you advice about what to do with interest rates?
Senator, we can agree, and it's not something that I would shy away from. I've heard many senators from this very committee in years past express strong views on interest rates. Humble central bankers should be listening and then making their own decisions.
Some politicians matter more than others.
Presumably,
And generally speaking, presidents matter, their opinion matters more than, say, a senator. President Trump has offered his opinion about what you ought to do with interest rates. Is that right?
Senator, he has not made his opinion on that a secret to anybody.
Yeah. And every president has that you're aware of.
Yes, they all tend to be in the same direction, Senator Kennedy.
Okay. Now, the problem is, can we agree that your credibility
like I said now, it's all
is the most important thing you have?
It's the most important thing to me. It's the most important thing to the institution. And it's the most important thing to the successful conduct of policy.
Okay. If the market's, that's a yes, right?
Yes.
Okay. The problem is that President Trump has said he's not going to appoint anybody who wouldn't agree to lower interest rates. Have you agreed with the president that you're going to lower interest rates?
Senator, I'm glad you framed it that way. The president never asked me to predetermine, commit, fix, decide on any interest rate decision in any of our discussions. Nor would I ever agree to do so.
So the president has never sat you down, looked you in the eye, and said, here's the deal, Scooter, I'm going to appoint you, but you got to agree to lower interest rates. That didn't happen, or did happen?
The president never once asked me to commit to any particular interest rate decision, period. And nor would I ever agree to do so if he had, but he never did. I was honored he nominated me, like everyone else in the committee in the world. I've heard his view on interest rates. It sounded very similar to me to every other president in economic history that I've studied.
Okay. I've got one more question because I'm about to run out of my parliamentary inquiry time. I've heard your argument in the last few months about artificial intelligence has made us so productive, labor so productive that companies don't have to raise prices. Therefore, inflation isn't a problem.
extremely productive.
Rates can be cut. Do you really believe that right now?
No, that is not how I would characterize the story on AI.
Okay, but you said what I just said.
I've said that this is the most disruptive moment in modern economic history in the U.S. and the world. I've said that artificial intelligence, AI,
Let me stop you because the chair's going to cut me off.
Oops, sorry.
Here's my worry, that a lot of this stuff about artificial intelligence making us more productive is a bunch of hype by people who want to sell stock in an IPO. Okay, I'd be careful there. Thank you, Mr.
Disagree
Chairman.
on that
I'll
respectively, Mr.
get to my
Kennedy,
5 minutes in a little bit.
because it's made me sure as hell productive, and the levels of feel for the small guy.
All over again. Brand new day, sir. Brand new day. Thank you very much. Senator
Thank you.
Cortez Masto.
Thank you. Mr. Warsh, thank you for taking the time with me. I appreciate meeting with you. Congratulations on this nomination, and welcome to all your family and friends who are here. Let me talk to you about a couple of things. It's really around economic theory, and we have talked a little bit about this when we were meeting. Inflation has been
How the Democrats even have a straight
above the Fed's target for 5 years. Would you agree with that?
Yes, Senator.
Yeah, and core PCE inflation has been running at about 3%, a full point above that Fed target, correct?
Yes.
And so some Federal Reserve officials have said that this excess is due to tariffs. Do you agree with that?
Senator, I don't. If I can make 2 points. much as we discussed in your office, I think the data that's being used to judge inflation is quite imperfect data. And among the projects that the economics profession, and if I'm confirmed as chairman of the Fed needs to do, is to try to use our new understanding and new data sources to see what's really the inflation rate in the economy. We used to use core PCE, core measures, so we'd exclude food and energy, because it was sort of a rough swag as to what was going on. We don't have to do a rough swag anymore. What I'm most interested in is what's the underlying inflation rate, not what's the one-time change in prices because of a change in geopolitics or a change in beef, but what's the underlying generalized change in prices in the economy. And my broad sense is that these inflation risks and the inflation damage the last several years is improving somewhat. It has improved somewhat in the last year. The measures I prefer are looking at things that are called trend averages, where we take out all of the tail risks, all of the one-off items, and we ask ourselves whether the generalized change in prices is having second-order effects on the economy. Again, they're not where they should be, but I think that the trend is quite favorable.
And these trend averages, the data that you're looking at now, is not traditionally the norm that economists would use in this position. Is that correct?
Some in the economics profession are increasingly looking to these median-type measures, but among the projects I would hope to undertake as one of the first reforms at the Fed is a data project, where we would go off and we would evaluate with the public sector and the private sector, including the Bureau of Labor Statistics, a survey of 1 billion prices. And what I'm really most interested, Senator, is what's the change of that 500 millionth and one price? Because that's inflation. That's a change in generalized level. In a market economy, prices change all the time, and I don't want to be confused by that. I want to know what inflation really is, and I still think there's some work to do.
And I respect, listen, I'm listening to you today and talking to you. I respect you truly believe as an economist and a theorist in this theory, in what you are talking to us today about, which is traditionally not the norm. And many are disagreeing with you on that, and publicly disagreeing. And so I understand that.
Many Democrats.
I guess the position I have is, I hope you're right, but at the end of the day, my concern is people are suffering right now with high costs, and we need to address it. And I don't know how long it's going to take for your economic theory
because
to
of
gain
the
traction or
policies
to
you Democrats
that
implemented
it's going
in
to
the
benefit
past.
so many people in this country right now. And here's one other thing, because I don't have that much time. And
You have a lot of nerve to try to lecture him after y'all caused the problem in the first place.
You've been on the Federal Reserve Board, and you were there during the financial crisis of 2008. You and I talked about this. I was the Attorney General then. It hit Nevada so hard. Here's what I do know, and at that time, in 2006, you attended numerous meetings where housing experts pleaded with you to stop predatory mortgages. In fact, Gail Burks, who was the CEO of Nevada's Fair Housing at that time, who I worked with,
Here comes the smear campaign.
leadership, including you, about predatory
Despite the
lending
fact
practices
they
such as
started the
flipping
problem,
loans or
they caused the
misinforming
problem in the
seniors
first
about
place.
reverse mortgages.
Remember, 2008
And in
crash happened.
2007, you said, and I quote, subprime
Obama
mortgages
was
have gotten a
president.
bad name in this environment, and in some cases, that's not just. You also said that you don't see any immediate
Yeah, read your
systemic risk
script.
issues among big banks. And you said that at that time. And then just recently, and this is what I want you to address,
Most people who
Senator Warren has said
really
that you told
are
her you
genuine.
had no regrets during this
You
tenure.
don't have to read a script.
How can we
They can
trust
say it
that
from
your
the heart.
economic theory, when you were wrong then, is going to be the accurate theory we need now to help so many families and businesses that are struggling with the policies
Hey, that
that
was
we're
a
dealing
good
with now?
job, reading your script.
Senator, let me address a few things. The chairman is going to cut me off when he must. But I would say this, for many years before the global financial crisis, I warned about the very real risks of Fannie Mae and Freddie Mac blowing up, which they did. I think that part of the housing market was vulnerable for many years, and not enough was
Anyone who
done
could
about
fog a
it.
mirror
Even
could get a
in spite
mortgage.
of my protestations and my urging about GSE reform, it wasn't done. I think that compounded the
That was
financial
like
crisis.
2 years after I got out of college,
Secondly,
started as
I
an
think
advisor.
subprime mortgages then, subprime assets then, were indicative indicative of prices of almost every financial asset that were
It did change
mispriced.
the
What I
advisors
suggested
to a
then and what I
fiduciary
believe
model.
now is that some private mortgages were just indicative of a set of prices that
A lot of advisors
were
were
incorrect, and they all repriced.
too large,
Just
too
to give
old
one
to
fine example before I turn to the chairman.
Perhaps
from a
those
commission-based to
examples right now.
fee-based.
Okay, sorry.
Let's go to Senator.
It's in the best interest of the
Want to
client.
give
I was
opportunity
lucky
finish
to
that exchange.
implement that model
Thank you, Mr. Chairman.
starting my
And,
career,
Mr. Warsh, I want to welcome you.
because it would have been an
and your family.
astronomically difficult task
And I want the committee to know that I've
and
known
embarrassing to go back to
Kevin
your
Warsh
clients
for
and
30 years. We first crossed paths back in 1992,
acknowledge
shortly
such.
after Kevin graduated from Stanford. We both worked in the White House staff at that point in time. And I just want to say this, that the man testifying before us today is the same man that I got to know then. Serious, disciplined, with a true heart for public service. And I want to say
Yes,
this
a
as
real
before.
person, not these
Kevin
shills.
Warsh is the man for the moment. His background, his experience, and his discipline are precisely what we need to bring our economy into its full potential.
He's not going to make
I'm
a
delighted to see him
transitory
here today
mistake.
as we both reinforce competence here at home and do the same thing abroad. And if I think about Kevin's qualifications, think about the contrast with the nominations that we saw with the last administration. I think this committee will recall that President Biden
Have a field day
nominated
on that subject.
prospective federal bank regulator, frankly, a graduate of Moscow State University in Russia, who advocated for replacing private bank deposits with retail accounts held at the central bank. Those who might criticize Kevin for his private sector success miss the point. Kevin's experience is not a liability, it's an asset. It brings a practical understanding in terms of how markets function to bear,
A
how
public
capital is allocated,
entity like
and
that?
how policy decisions shape the real economy. Mr. Warsh, how will your experiences, both the public and the private sector, shape your governance of the Fed should you be confirmed?
Senator, thank you very much, and thanks for the kind introduction. For your colleagues on this panel, Senator Haggard and I shared a desk, 91 and 92, so I've known him for a very long time. I think my prior experience at the Fed, which some of your colleagues made reference to, are going to allow me to hit the ground running. This is as consequential a moment for the U.S. economy and, frankly, for the institution as any point since the late 1970s. And so my experience at the Fed, my understanding of the people, the culture, the governance, and of the things that are ripe for reform are going to give me a leg up. We don't have a long time to do new studies and contemplate what reform should be. We have a short window to try to bring inflation back down to where it should be to ensure price stability. And because AI that Senator Kennedy referenced is so consequential, and AI is quickly becoming at something like escape velocity, it's important to revisit the Fed's models and see whether this innovation cycle, while it could have over time improvements in the price level and make the Fed's job on inflation easier, there's a question about what that means for employment, which is another part of the Fed's mandate. So I think that's part and parcel of what my background suggestion and history would suggest. But if I can make one other point,
Yeah, Kevin.
what the Fed needs is a reform to its frameworks and reforms to its communications. I've seen what the Fed's done well, and often I'll give them 1 cheer or 2, but now more than ever, the Federal Reserve needs 3 cheers, and that's what I hope to deliver.
Well, let's stay on this point, particularly, and you've mentioned this in your commentary, the point of the Fed's mission creep over the years. If you think about what the Fed has done, they've strayed into what I would call politically contentious areas, going well beyond their core mandate. And we've seen this across the Federal Reserve System. And what the Fed has done is eroded its credibility. It's what it should be, which is an apolitical and independent central bank. In bank regulation and supervision, the Fed's focused on non-material and often politically charged areas. I'm thinking about climate change policy here. Elsewhere in the Federal Reserve System, we've seen regional reserve banks use as platforms for promoting very divisive partisan policies.
Yeah.
Thinking about DEI, climate policy,
Yeah,
even racial
like
reparations.
what?
The Minneapolis Fed even went so far as to publicly lobby for an amendment to a state constitution on education policy.
Yeah, like what
How big
the?
the remit can they get? In the 2020 Monetary Policy Review, the Fed even sought to redefine its legislative mandate of maximum employment as a broad-based and inclusive goal, close quote. I mean, that's tacitly understood to mean that the Fed should accept higher inflation to privilege select groups of Americans. And while the Fed undertook this social engineering, it also financially engineered a massive footprint in our market. QE provided near unlimited bid for government debt, which of course made it easy for us to subsidize more government debt here,
Make it fair for
subsidize
everyone.
government financing, and encourage, frankly, what I view as very reckless federal spending. In each of these examples, we see a clear pattern.
Yeah,
The Fed
they,
has
in
straight
March
beyond
2020,
its
they
mandate
increased the money
to
supply
encourage broad
40%.
policies that ought to be left to those of us that are democratically accountable. Mr. Warsh, the Fed's own actions have eroded its credibility. What do you think should be done to regain public trust?
Senator, robust reform. The Fed can deliver on the mandate that you gave it if it
I
sticks
love
to
that.
its
He
knitting.
gives a
As it
simple,
wanders into
concise
areas upon which it
answer.
has neither authority or expertise, it loses its focus. And I'll just give one example. In 2020, as you reference, when the Federal Reserve changed its inflation framework in August of 2020, inflation was running at around 1.72%. And the Fed changed its framework, rewrote in some sense the remit you gave it, and they asked for a little more inflation. They ended up with a lot more, and that was the foundation for the inflation surge that happened in the subsequent years, which we're still living with.
Yeah,
Thank you, Mr. Warsh. Thank you, Mr. Chair.
that's what happens when you increase the money supply 40%.
Thank you, Mr. Chair. Good morning, Mr. Warsh. It's still morning. So
Inflation
let me
persists.
start with this.
You want to hold hard assets.
Have confidence that this
Consult your
economy has
advisor.
potential. I think that's fair to say. And you've also said that this is a time of great consequence for the nation's economy, perhaps one of the most
Here we
significant
go.
hinge points in a couple of generations. That's fair to say?
Yes, Senator.
Thank you. And so I agree with that.
Tina.
And I actually want to
Should
go
call her
a little
Miss
further
Davina.
because I think that it seems to me that this economy is amazing for rich people, people who have a lot of capital. And in fact, we can see in 2025, billionaire wealth grew 3 times faster than the average rate
You got
in
this
previous
low
5
T
years.
guy like right
And
behind
wealthy
her.
households hold a massive portion of the nation's wealth. And this, I think, is the tipping point that our economy actually faces
Those
right now. And I can
policies
tell you
that you
in
refer to
Minnesota,
of mass wealth
a lot
were
of people are
Democrat
telling me that
policies.
It is harder and harder for them to afford the basics. They
You should
aren't
be
rich. They don't
complaining
have
about
money
your
to
own
pay their bills,
selves.
to pay their doctor's bills. So I want to look at this with you for a few minutes. And I want to start with inflation. So last week, President Trump said that gas prices are, quote, not very high, and, quote, we're having some fake inflation because of the fuel.
This
So,
isn't
understand what
a
you've been saying about
referendum
data
on
and all
Trump.
of that. Let me
This
just
is a
ask you, do
hearing
you think that gas prices going up
on a new
20%
Fed chair
is fake
candidate.
inflation?
Tina, Misdemeanor.
Senator, the gas prices, like beef prices, eggs, milk, and the rest, they move, and when they move in the wrong direction, American people are hurting by it. There's no
That's
question
right.
about it.
That's right. American people feel it. It's not fake to them.
Yeah, we
It's money
know
that
what
they
the
have in their
problem
pocket because
is.
gas is up.
why do you always
20%.
focus on the problem
I think
which
my-
y'all started?
My constituents would say that that inflation is real and not fake. Okay, so let's look at
Yeah, no
unemployment.
shit.
At the State of the Union, the president said,
The Democrats'
quote,
modus operandi.
"The economy
They
is
cause a problem and
roaring
then they
economy." Excuse me, this is
provide the
quote. "The roaring
solution.
economy is roaring like never
And then
before."
gaslight you on
So,
to who started
do you
it.
agree with that statement? Is that how you see the economy,
Trying to
that
make
is
themselves look
roaring
like the
like
savior.
never roaring before?
So, Senator, if I can clarify 2 things. One, there's a difference between the change in prices and inflation. The change in prices happen in a market economy. When inflation moves up, that's because the Fed had something to do with it. Now, on the state of the economy, I would say that the broad contours of the economy are improving. The potential of the economy, the real results of the economy are improving, but I think it can improve more, and I think in the years ahead, I think the economy's potential is strengthening.
So, the reality is that the economic data, understanding what you're saying about economic data being not imperfect, that there was
Reality?
zero job growth in 2025. And so that looks to me like not a roaring
Yeah, after
economy. It
they
looks like a weak
fired
economy,
all
which is
these,
what
like,
my constituents are telling
public
me back in Minnesota.
sector
Let me go to one last
jobs that they
look at this. Around the country, the average cost of home insurance rose 12% last year. Now, in my home state of Minnesota,
Another problem they
coastal
started.
state,
Trump had to fix.
premiums rose 34% in 2025. This is, of course, caused by extreme weather events, hail, floods, hurricanes, climate change. So is that
that's because y'all use FEMA
in your perspective, is that
fund
increase in home
illegals.
insurance, property and casualty insurance, isn't that inflation?
That's your whole problem again.
Sir, if I can answer two questions that I think I heard, and we talked about both of these in your office. When we look at the payroll numbers every month and we ask ourselves whether it's good or bad, the job you gave to the Federal Reserve is to ensure we're at maximum sustainable employment. I think broadly speaking, the economy is running about close to full employment, though we never know what the right number is. So if Americans that want a job can find a job, then by the Fed's metric, we're at full employment. On the question of insurance premiums and the rest, when I look broadly across the economy, I would say when we look at health care, when we look at education, we look at housing, those prices have tended to go up more. In the less regulated parts of the economy, we've seen a downward structure, a downward change in prices, and we try to aggregate them the best we can.
But I'm not exactly sure what your point is there, but I would just say that my point
How can you not know what the point is there?
Insurance rates caused by increasing extreme weather events, climate changes, and
Don't gaslight us, Tina,
Miss
Femina.
In my state are dealing with. And this, of course, the reason I'm
Stop being
focusing
so
on this is
defensive.
because I am.
It's funny how they try to look all conservative.
I'm worried that because of the pressure that
you're
you
worried
are
that you're
going to
gonna
be under from
lose
the president
your job.
to lower interest rates, that this inflationary
what you're
pressure
worried
that my
about.
constituents are feeling is going to get worse and not better. And so
Y'all started the problem in the first
I don't have
place,
time
you
to ask my
morons.
last question, but it is literally
That's
this.
so
The
lame.
president
You're
has
wasting
said that
everyone's
he
time. Come
demands
on.
that the next Fed chair will lower interest rates. And I take him at his word at that, and that is what causes me such grave concern here. Thank you, Mr. Chair.
Yes, ma'am.
You don't concern him. Get out of here.
Thank you, Mr. Chairman. Welcome, Mr. Warsh, and congratulations on your nomination. And thanks for appearing before this committee, and taking both the positive questions and some of the hostility. I apologize for my colleague's behavior when it strays outside of decorum. My first question is about the balance sheet of the Fed. What is your view about the size of the balance sheet currently?
Thank you, Senator. As we talked about in your office, the Fed balance sheet has played a particularly, I think, unhelpful role in helping the Fed achieve its dual mandate. The senator had just mentioned what she described as the increase for financial assets relative to real assets. Well, part of that is the Federal Reserve. The Fed is not blameless in that as it's grown the Fed's balance sheet, grown its imprimatur on the economy, those with financial assets have benefited from it. The reason why I prefer monetary policy to use interest rates as the dominant force is interest rates affect a far broader cross-section of the economy. Interest rates get in the cracks. If we were to cut rates, then a broader number of people will benefit from it versus quantitative easing, which tends to move through financial assets first. Half of our fellow Americans don't own any financial assets, so they're wondering what's in it for them. Broadly speaking, Senator, on the balance sheet, I was involved in 2008 and 2009 in response to the global financial crisis that Senator Warren referenced, and we used extraordinary measures in creating
I don't know how Warren has even a voice
we
at this
agreed to do
point.
that only in the times of emergencies. Only
After
when
she
interest rates were
circumvented
king zero.
Congress with
The
the
big balance sheet has become an ordinary recurring force. I think has been quite unhelpful, and it's part of the reason why the Fed is in the business of politics.
in America's
Slowly and deliberatively, I believe we need a smaller central bank balance sheet. It took us 18 years to create this big balance sheet that's done quite a bit of harm, it strikes me, to the Fed's credibility. Working with the Treasury Secretary, we're going to have to find out a way in which we can take the balance sheet and make it smaller, because a large balance sheet where the Fed owns more outstanding debt than many parts of the financial markets, that's fiscal policy skies. Fed needs to get out of the fiscal business, focus on the monetary business, so the Fed can deliver on the remit you gave us.
Thanks for that response, because some of us don't appreciate the connection between the size of the Fed's balance sheet and interest rates. With regard to interest rates, can you tell us a little bit about your conversations with President Trump about interest rates?
Yeah, I don't want to put words in the president's mouth, but I think he has said loudly and clearly his view on interest rates. Don't think I'm breaking any news here. But I can tell you what I said, and what I said to the president is what I've said to this committee and what I've frankly been writing about for more than a decade. Interest rates are the much better way to be using monetary policy than buying bonds and mortgages, some of which are issued from the United States Treasury Department. That is a confusion of roles. That leads to a set of mission creep. So interest rates are the dominant tool, and interest rates, as I mentioned, get in the cracks. My broad view on the conduct of policy from here is that too many Fed officials, past and present, opine in advance about where they think interest rates should be next meeting, next quarter, next year. I think that's quite unhelpful. As we've heard today from many of your colleagues.
Waste everyone's time.
We don't know the state of AI. We can't be certain about the state of geopolitics. The economy is going to change. You need central bankers that are humble, that are nimble, that are open-minded, that can react when we have good data, when events strike us. My broad view is that interest rates need to be forward-looking, need to be based on better data, and we should have a big, robust deliberation inside the FOMC. I tend to favor messier meetings than some, where people don't rehearse scripts, but we can have a good family fight. If the central bank has that good family fight, I think that they're going to make better decisions. And if they happen to make mistakes, they'll correct them sooner. So I'm not one for pre-deciding what interest rates should be. I never said to the president where I think rates should be. I never committed any such thing, and I wouldn't have even thought about doing so.
Quick yes or no, do you believe that digital assets should be incorporated into our financial industry so Americans have new investment opportunities and consumer protections?
Senator, digital assets are already part of the fabric of our financial services industry in the United States, yes.
Thanks, Mr. Walton.
Senator Warsh.
Thank you, Brother Chair. Mr. Warsh, congratulations on your nomination, and I appreciated our time together in my office a few weeks ago. If confirmed, you will serve as chair of one of the most powerful economic institutions in the world. Decisions you make would move markets, affect Americans' retirement, savings, and ability to buy homes. It would influence the global economy.
Take a look at this, folks.
You currently serve as a lecturer
World War
at
II.
Stanford University.
Parabola.
If you were to assign, if Professor Warsh were to
Notice,
assign a letter
look how much of that
to the American
is under the
economy
Democrats.
today, for the average working family, what grade would you assign?
All that.
Senator,
It's like
it was
double.
good to meet with you in your office. You know, in modern
I'll just
academic
leave this up here
institutions,
so
they
y'all
give
can
everybody
see.
A's. So it's not a fair comparison, especially at elite universities. I know everyone gets perfect grades.
What grade would you give the economy?
Well, if I gave a student anything other than an A, the dean would summon me to his office because I would have hurt his self-image.
Well, the Americans that I talked to, particularly in the state of Georgia,
Pow!
who haven't had the benefit of attending some of these elite institutions,
I'll give you a break, man.
are trying to make their lives
Come
work.
on. You gonna pull the
They're
race card
sitting
now?
around their kitchen
Get
tables
outta
trying
here.
to figure out how to put their kids through school.
Comical.
And regardless of how the markets are doing, consumer confidence is at a record low. So
It is?
that's their grade on the economy. Working families are struggling, and things are getting worse. The inflation rate has remained elevated.
Do you not have a
above the Fed's
401k?
2% target rate throughout
Consumer confidence is at a low.
term.
Let me show
despite
y'all
its
something
promise
here.
to lower Inflation,
This is
the
the stock
president's
market the
war
last
in
year.
Iran, has spiked
Blah,
energy
blah,
prices
blah.
by 11%.
Consumer
And
confidence
Americans are paying
low.
on average nearly $4
These
a
guys are
gallon
nothing but a bunch of
for
unscrupulous
gas
charlatans.
because of the war. We've lost nearly 90,000 manufacturing jobs since President Trump
Shameless.
took office. He promised us a manufacturing
Shameless as a
boom.
Democrat could be.
We've lost 90,000 manufacturing jobs.
We don't care.
And
If our
Americans
economic
already dealing with high prices
policies
paid $1,000
create
more
inflation,
per household in
which is a regressive
2025
tax.
as a direct result
We
of
just care
President Trump's
about lining our own
illegal
pockets.
tariffs, which he remains
We are
committed
Democrats.
to in spite of
We
the
don't
Supreme
have a mind
Court
of our own. We just read
decision.
off of scripts. Just look at
he
Senator
does even
Raphael
better than
Warnock
this
from
practice
Georgia.
of these institutions.
Thank
When
you,
asked
thank
what
you,
grade
y'all.
he would give the economy, he said an A.
I'm your
And
financial
then he thought
advisor,
about it
bartender.
and said,
I'll
no,
be here all
actually, A++++.
week. Be sure to give us a tip.
And as I thought about his answer, I was wondering who was he talking about? Who is it an A+ for?
And I think you're wondering
Certainly
a
not
lot of imaginary
ordinary
stuff there,
working-class
buddy.
Georgians, that I'm fighting for every single day. Maybe the people closest to
Who
him.
needs comedy? Just watch
But
this.
I'm hard-pressed to think that folks across the state of Georgia who are looking at their grocery bill, looking at their gas bill, looking at the $1,000 that they've had
Yes,
to pay would
a problem y'all
give the
started.
economy,
I once again
an
reference.
A++.
See this
What are
debt?
your thoughts?
When you monetize debt, it
Senator,
causes
thank you.
inflation, guys.
If the Fed were to execute on a series of policy reforms, then I believe the economy can be stronger. I believe inflation can be lower, and I believe real take-home pay can be higher. I think the Fed is not blameless for the divergence you described between those that have financial assets and those that don't. Had the balance sheet not been brought from the $800 billion level when I showed up at the Fed in 2006 to an order of magnitude higher, if the Fed had kept a smaller balance sheet, the way the Senator just talked about a few moments ago, I think interest rates
If they want
could be lower,
independence, then how come the prior
inflation
Fed
could be
didn't stop
better,
all
and the
this
economy could be
monetization of
stronger.
debt through all the
you
bills they
discussed the
passed?
theory of the case
Like
with me
the
in
Deficit
that
Reduction
regard.
Act?
But I think you would agree that the recognition, I think you
That added $1 trillion
in
to our
your
debt?
testimony is the recognition that this is not A++ economy. In your economy, in your testimony, you know the importance of price stability.
Oh, it's not an
correctly note
A++
that
economy,
inflation
right?
means people lose purchasing power,
I once
particularly
again
among
reference you.
low-income folks. But I also noticed your testimony did not really
The
discuss
1-year
the
chart.
Fed's other mandate.
Look at
And
April
that's to
last year, and look at
maximize
it now.
employment.
Total market.
Inflation is critically important, but if you don't
Dun,
have a
dun,
job, you're in trouble. Do you view the
Meanwhile,
Fed's
back to the Hall of
mandate for
Justice,
maximizing
Aquaman prepares a
employment
peanut butter
as
and jelly
equally
sandwich.
important to its price
Does
stability
it get too
mandate?
crap?
And are you concerned
Crap.
about weak job growth numbers?
Before the
That's how
nominee answers the
my
question, the
Arabic
senator
colleagues
from the elite
pronounces
University
it.
of Morehouse
Crap.
is out of time.
Christ,
So
Christ.
I appreciate the question.
These Democrat
We will have the
politicians
answer
are
to it.
crap.
I know you wanted to attend Morehouse College. I'm sorry.
Everybody wants to attend Morehouse, by the way, but I'm a Charleston Southern Buck.
I appreciate
Very
we-
happy about that. He couldn't get into Charleston Southern, but it's good you got it somewhere. This is good.
If you can't get into Morehouse, go to Stanford.
Oh,
Everybody's
smack.
got jokes up here, so we're going to
Thank you, Mr. Chairman. Before I
It's
get
easy
started,
to
I
make
want to
fun of these
emphasize that
Democrats, you know,
transparency
they're so-
and accountability at the Fed are absolutely vital. The
so
American people
scrupulous.
need to have trust in our government. We need to have trust in our government agencies, and that includes transparency and accountability in the Fed. So when we're talking about billions of dollars being spent on renovations, it's absolutely appropriate for Congress to ask questions. And it is absolutely appropriate for Congress
Yeah,
to
here we go.
get answers. We need to understand where this substantial
They're making an
amount of
issue
money
about
has gone.
Trump making reservations
And
at the
we need
White
to ensure
House.
that every institution,
They're gonna
and
trivialize
including
that
the Fed,
while ignoring
is
the
always
material
making
facts.
decisions that are in the best interest of the American people. And so
Exactly.
I urge everyone involved
That's
to make
not
sure
in the
that
best
any
interest to
outstanding questions on
trivialize.
this matter
We need
come
to
to
focus on
fruition
what's
so
important.
that we can
You go,
get
girl.
answers and move on and have a smooth and timely transition and a confirmation process, of which I want to say congratulations on both your nomination, your willingness to be here today, and I also want to say that to your family. I think a lot of people miss the fact that when any of us step up to serve, that it's not just you, it's your family that goes through so much. And so we just want to say that sacrifice is often overlooked, and we certainly appreciate your family being with you today and all of you and what you're willing to do here. I had a chance to get to know you over the years, and as many of my Republican colleagues have and other colleagues, and I think we would all say you are absolutely the right man for the job at the right time in our country's history. And I am excited about your leadership at the Fed. We have had an opportunity to talk about a number of issues, but I know that your integrity and that your commitment to the American people are going to help restore confidence at the Fed, and it will also ultimately serve our country incredibly well. So it's not going to be any easy task to return that confidence. We've spoken about needed reforms at the Fed on the monetary policy side and also the operational and internal standpoint as well. And of course, your calls for reform aren't baseless. You served at the Fed during one of the most challenging times. You just referenced it in your previous answer to a question from my colleague across the aisle. I believe you said there was a balance sheet, $800 billion, when you showed up in 2006. So talk to me a little bit, speak to me about that, about what you have seen during your tenure at the Fed already, and then what other life experiences you have that you will bring as you tackle this role.
Yeah, so Senator, great to see you again. So the chairman knows I worked with the senator when she was a staffer on this very committee, and I was a young staffer myself. So it's an honor to be here. And Senator, as you know, this is a serious responsibility. I'm honored the president nominated me for it. This is a time of consequence, not just for the country, but for the central bank. I think the central bank can go back to first principles and improve itself. I see most of the actions of the Fed come from good intentions. But when you gave the Fed a remit, it wasn't a general roving remit to do what it thought was right. It was a particular remit to focus on particular issues and to not wander. And that's the trade-off on independence. Independence about the conduct of monetary policy, where we can hear criticisms from others in the economics profession, elected officials, and we should be open-minded to them. Listen, I think there's been a considerable amount of groupthink in the economics profession, and so being open-minded to it is important. But outside of monetary policy, it's important that the central bank work with the government on areas of overlap. And so I think that's likely to happen going forward. If you ask Senator Britt about my biggest lessons are about how a central bank should be acting in crisis times versus in normal times. In the crisis of 2008 and the pandemic of the crisis of 2020, that's when the Fed needs to take extraordinary measures. Going back to the founding of the Fed in 1913, it was created to respond to shocks. And so there, I think central bankers often should get the benefit of the doubt. When the world is racing away from it, the real economy is suffering fast, the central bank should show up with liquidity support. But the job of the central bank is to try to mitigate those risks in advance, to buy insurance so that we don't go from shock to shock, from boom to bust. And so my criticism is more about the conduct of monetary policy and regulatory policy in normal times. And that's the area that are in need of reform. We have a window where the economy is improving, but I would say more improvement is still possible. And it's during this policy that we need to look introspectively, look fundamentally at reform. So when there is another risk, there is another shock, the central bank is prepared to address it with less harm to the real economy.
Thank you so much. I am out of time. I look forward to your service to our nation, and I know that we will be in great hands.
Thank you.
Thank you, Senator Britt. Senator Kim.
Thank you, Chairman. Mr. Warsh, good to see you. I guess I just wanted to start off by talking about just the state of American families right now. Nearly 60% of people surveyed say that they're worried about affording the very basics: rent, gas, groceries, the bills. 60% of Americans say that they cannot handle a $1,000 emergency. 40% of Americans saying that they can't handle a $400
problem that y'all caused.
emergency.
Once again, I reference this.
Families are struggling right now with affordability.
Senator, as we discussed in your office, central bankers should not be second-guessing what people feel and see in their own lives.
Exactly.
People's lived experiences matter to them. What I can say is the central bank has some responsibility for the things that you've described, and that the legacy of inflation, what I think is the biggest economic policy error in 40 or 50 years, happened just a few years ago, and we're still living with the remnants of it.
Exactly.
I think inflation is less
just a few
problematic
years
than it was
ago.
a couple of years
Once
ago.
again, I referenced that she
Affordability continues, though. That sounds
He cuts
right.
them off.
Because I'll be honest with you, when I hear, I heard 2 months ago President Trump say,
you can be honest with me. Wait,
what
you weren't being honest
have
before,
you not
Mr.
heard over the last
Kim?
2 weeks? Affordability. Because
Yeah,
I won affordability. It sounds like you would disagree with that assessment that the fight for affordability for American families is over.
So I think the trend is going in the right direction.
But we still have more work to do.
Well, the way I would describe it, Senator, is
Yeah,
the
no
cumulative increase in prices
Tell us
starting
something we don't know. Come
early
on.
2020 till now is between 25 and 35%. So I understand what hardworking Americans say. It's still a struggle. That's a legacy of a past policy error.
Exactly.
One thing
That y'all started cause in the
just
first
the real
place.
cost that families are facing right now, and I appreciate
Blah,
that
blah.
you're pushing back on that comment that the president had about calling the energy prices and the fuel price increases that we're having fake inflation, because right now Americans paid more than $8.4 billion more in gas during the first year.
Read your talking points.
Fertilizer, 70%
You're doing a
of
good job
respondents to the
parroting.
Farm Bureau survey said that fertilizer is unable to be afforded right now, just given the price increases. Are you concerned that there could
Y'all
be
caused such a great problem, didn't y'all?
long-term effects of this war in Iran? Especially if we're continuing to see these challenges when it comes to fuel.
Yes, thank God we took out the most
Senator, if
murderous
my reform agenda,
Hitler
if
2.0
confirmed, stands for anything,
genocidal
it's for
actual real dictator.
the central bank,
fascist.
especially the Fed chairman, to stay in its lane.
I know that, but
So I wouldn't want to wander outside of it. I'm happy.
Right.
also
Y'all are responsible for fiscal
in terms of
policy. The
understanding
Fed
where
is
our economy is
responsible
going.
for
So
monetary
does an impact of that
policy.
magnitude rise to something that the Fed should keep an eye on?
Democrats
and be
always try
concerned
to
about?
pin
The Fed
the
should
fiscal
have an open
errors
mind
on
towards all sorts of data.
the
But
Fed.
the things that central banks can affect
And then
are
have
things
to
that are not
constantly
one-off in
remind them
nature, but
of
are
this.
persistent
Like,
and find their way into the generalized
so-
price level.
And that's something I wanted to ask you about that,
Right.
because
Ad nauseam.
you talked about a fundamental
Pass me
policy
the
change
puke bucket.
when it comes to the Fed, and I guess I wanted to just get a little bit more clarity on that.
We spend
Senator
90% of our
mentioned about the
time
balance sheet
on
and the
BS.
concern you have about that.
Thanks to these
What level do you think that
Democrats.
should be at? If it's 6.7 trillion
What
now,
level?
where do you think the goal is in your mind?
Something different than what y'all been
I
doing.
haven't fixed a particular number, but any changes, Senator, in the balance sheet would be part of a public discussion, debated rigorously, and if and when the central bank comes to a judgment about a new balance sheet policy, which I hope the central bank would, it would be described well in advance. As I mentioned, it took 18 years to create this balance sheet problem, and we won't be able to fix it in 18 minutes, and so that's why I think deliberation here is important. Suffice it to say,
Stop
it
trying to
should
gaslight
be,
us,
and at least as
Senator
important,
Kim.
it should not be holding long-term treasury assets as if it's the fiscal authority. That's what gets into politics.
I appreciate you
Yeah.
saying that it's important to be able to have that
Exactly.
public discussion.
So why don't you
I
ask
think
him a
that's come up as
question
I've
that
been
doesn't
engaged with
involve something
different
that he's not
experts, is
responsible
concern
for,
about rapid
fiscal
reduction.
policy? That's your
If
job.
you are moving in that speed, that it could generate have a number of concerns, including upward pressure on long-term interest rates. So I guess I just wanted to check, do you share that concern? As you are thinking about how to reduce it, do you also understand, though, that there are concerns about rapid reduction in the speed with which you're trying to go down?
Yes, Senator, and that kind of regime change would have to be deliberate, well orchestrated, well choreographed, and well described so that unnecessary upset are not done to financial markets as we go to a policy regime change much more focused on interest rates.
With that, I'll yield back.
Thank you, sir. Senator Ricketts.
Thank you, Mr. Chairman. Thank you, Mr. Warsh. It was great to see you in my office. Thanks for coming by. I want to continue to talk about inflation because it is something that is incredibly important. I think you share the view that inflation is a silent tax on American households. Is that accurate?
Senator, it's accurate. It's the most regressive tax that anyone in Washington could come up with. If you were trying to do the most harm to the least well-off among us, inflation would be the way to do it.
Yeah, and my colleagues on the other side of the aisle have been talking about that. And I know, at least I don't recall, that they ever talked about that during the Biden administration. Because it was during the Biden administration that we saw this record inflation, this 40-year
Exactly.
And yet my Democrat colleagues were silent about it back then.
Boom, look at that debt.
But of course, American households were hurting back then as well. Inflation was caused by President
Biden's
ridiculous. Reckless policies and reckless spending. Let's look at
they talk about
a partisan bill
how they're there for American people,
which cost taxpayers $1.9 trillion.
It's like they want to wreck our country on purpose.
Inflation was at 2.6%. Inflation quickly accelerated. It was over 5% by May, June, and July. By the end of the year, in December, it was 7%. Does federal government spending have anything to do with inflation, Mr. Warsh?
Senator, as we talked
That
about.
was the confirmation hearing of Kevin Warsh, President Trump's nominee for Federal Reserve Chair, in front of the Senate Banking Committee. Many concerns being issued.
Funny how they cut him off
on
on
Democrats
right there
around
because
standard of living, the measure
Bloomberg
of the
is a
economy, on the Republican
Democrat
side, a focus on the duties of the Federal Reserve. Let's just bring all of
they are
this
second to
together
none when it
and
comes to market information. That's why I watch. Plus, you need to get a balanced perspective.
The toughest questioning from your perspective.
That's why I got Bloomberg on one side, Wall Street Journal on the other.
The toughest questioning actually came from Elizabeth Warren. Now, you know where she's going to be coming from in this kind of situation, but she did ask a question that had nothing to do with monetary policy, but maybe something
Just
to
look
do
at her,
with
like,
Kevin
personal
Warsh
wealth
and
net
Donald
worth
Trump.
went up,
She
like,
said, did Donald Trump win the 2020 election? Well, of course, anybody who's appointed to anything by Trump can't admit that. And so does that raise questions
Michael
on
McKee,
Wall
you're
Street
shill,
about
man.
whether he
Shut
would
up,
be
dude.
subservient to the president or not? He was directly asked whether he would be the president's sock puppet, and he said absolutely not. And he also said that he's never been asked by the president to do anything with
He was being
interest rates.
facetious,
But there's always going to be
McKee.
that
That
lingering
was meant to be
suspicion,
a
I would
joke,
think, that
point
as
out
long
the
as Donald
absurdity
Trump is
of it.
speaking out,
Shut
Kevin
up.
Warsh might be listening.
Whack job.
And so I think that's going to be one of the bigger takeaways from this. The other is that he seems to want to make a lot of reforms to the Fed along the lines of maybe getting rid of the summaries of economic projections.
She'll laugh at how foolish
the,
these guys have gotten.
Plot, and he wants to come up with a new way to measure inflation. A lot of things that would take time to do.
That's the main headline that we're running, Mike, right? That Warsh is saying the Fed needs a new framework for addressing inflation, but didn't actually give us any specifics on what that looks like. What is he talking to here? He did discuss, for example, the role of energy prices.
Dude, anything is a better framework than this.
Inflation. He also declined to sort of comment on the state of an American household, for example, and what the real-world experiences of Americans right now.
Yeah, I'm watching some of the social media comments and analyst comments go by, and I think people tend to forget that a nominee for any position before the Senate is going to try to be as vague as possible. He doesn't want to get pinned down on what exactly he would do on a particular inflation rate.
He's got a point there. He doesn't want to get pinned down because the Democrats will run on a
what that situation
soundbite.
is going to be. But he did say he wants to come up with a different framework. What that means isn't exactly clear. The Fed tried to
spin
do a
it
different
into
framework
something completely
when
different.
they
That's their
were coming
modus
out of
operandi,
or
wasting
going into
everyone's
COVID
time,
rather, and say that they
constantly
wanted to
wasting
make
time,
sure that the
valuable
Fed
time when we could
was
be
as
solving these
inclusive as
problems
possible, the economy was as inclusive as
started.
possible, and that they could tolerate a little more inflation for that. Warsh is very critical of that. He seemed to suggest that if we use more real-time data, they would have a better picture of inflation.
Right?
And he advocated
Their
for the
policy
use
has
of what they
been
call the
largely
trim
reactive.
mean, where you take off the biggest
That's
outliers
ridiculous
on
to
the
have
top
a
and
reactive
bottom
policy
of
like that.
the inflation measures and
wanna be
basically look at the
proactive.
middle, and that would be a better way to
That's
look at
Trump's stance
maybe
on
the
it.
Fed's target. He didn't say
not trying to
specifically, but the
control the
Fed's
Fed.
2% target,
He's trying to
and
make
by
it to
using
where
the
they start acting
PCE measure that
proactively
they
instead
use
of
now.
reactively.
Mike McKee is our international economics and policy correspondent. He's been all across this Warsh testimony. Thank you. Let's now bring in Bloomberg's Washington correspondent, Tyler Kendall. And there was an exchange in proceedings with Senator Tillis, who made this about the Department of Justice's current and ongoing investigation into the Fed. And he made his time contingent around a consideration of that, explaining to us what we need to know.
Instead of like telling us what y'all think, why don't y'all let them talk so we can, decide for ourselves?
Sit back and relax for the time being, because he wasn't going to ask him any questions, but instead he was going to focus his remarks on the Department of Justice investigation, as he maintains that he will continue to block Kevin Warsh's nomination from reaching the full floor until that legal matter is resolved. And he really can make good on these threats, considering Republicans only have a 13-11 majority on the committee. But I actually caught up with Senator Tillis afterwards. He came and spoke to us here in the hallway, and he seemed to float a potential off-ramp, saying that he would be in favor if there was a joint congressional oversight of Fed renovations. In addition to that DOJ investigation being dropped, then he would indeed release his block on the nominee. Now, importantly, this still means that the DOJ investigation has to be blocked. And we heard from President Trump in an interview earlier today, maintaining, doubling down that he wants to see that ultimately seen through, and that the DOJ is going to appeal after we saw a federal judge in that case block those subpoenas. But this does feel significant, because I actually spoke to Senator Tillis a few months ago, and he said that there needs to be no sort of investigation into this specific renovation, when we had previously reported
How about y'all let the
Fed look into it as an
nominee speak instead of
interpreting
for us with your curated, truncated,
congressional oversight into the renovations. But that DOJ
lacking
investigation into
contextual
allegations
responses.
that Powell misled this committee in his testimony.
Conveniently, the
about those
Republicans are
renovations
talking right
ultimately
now,
still needs to be dropped in order
and
for
they're-
him to move the nominee forward.
They're speaking over him.
Bloomberg's
How about
Washington
y'all
correspondent Tyler Kendall.
do
With the latest
this
on that set
and less of this?
Senator Tillis, we so
Let's hear them
appreciate it.
speak so
Bloomberg
we
Tech
can,
is up next.
think for ourselves. Anyways, folks, I think I've said enough. That's why you hired me, to conduct this due diligence. Signing out. Take care.